Do the wealthy truly know something that we don't? In today's video, we're going to be looking at financial lessons that only the wealthy truly understand. And I want to break these down. So when it comes to financial education and literacy, it is something that I feel really needs to be taught in school. When you're thinking middle school, when you're thinking high school, learning how to invest, entrepreneurship, even looking at personal finance needs to be the educational basis. And overall, some of these concepts are foreign to a lot of individuals and they don't hear them. So let's go ahead and kick off this list. Now, the first one, investing is essential. It is not optional. This is one of the biggest things. The earlier that you really grasp this concept, that when it comes to being wealthy, it is not enough to just save money. If you're just saving money, it's going to get eaten up by inflation. You're not going to have the nest egg that you need. That means consistently and constantly investing into stocks, real estate, business generating passive income, anything that is going to offer that compound growth. And again, the earlier that you get this, time is the secret weapon. When you think about timing the market versus time in the market, the time in the market is always going to win 99.9% of the time. And even thinking of 401ks, thinking of IRAs, thinking of wealth generation, over 90% of millionaires are first generation millionaires that are made from the stock market itself. Now, the second one, money is a tool, not a goal. This is something that it took me an incredible amount of time to actually get over. When you think of money, it is something that is not only building wealth, but it is something that you exchange for goods and services. It is really the tool to achieve the goals that I want. When you think about money and you think about, I want to make $100,000, I want $1 million, I want $5 million, it doesn't matter. It is not the ultimate objective. It is not getting the wealth that is there. It is about investing, growing a business, career opportunity. The life you want to have is more of a means to an end, because unfortunately, when we all go, and of course, we always do have an anointed date, but overall, when you do go, it's really about making the most of the time that you're here, because you can't take the money with you. If you're setting up generational wealth, if you're thinking your kids or your grandkids, it is the accumulation and really purposeful planning and financial planning that is going to really make the big difference. Now, of course, for me, this is something, again, took a little bit later in life to really understand multiple streams of income. Now, this is really the key to generating wealth and diversification and really investing. People don't understand that if you're really relying on that single source of income, so you have a 9-to-5 job, if that goes away, that's it. It's wrecked, it's ruined. All of your wealth, all of your income generation is completely gone. Now, for this, we look at rental properties, dividends, side businesses like what we're doing right here on YouTube, royalties to include financial stability. So for instance, if anything should happen to my job, God forbid, then I would have the access to put more time and effort into YouTube. And honestly, looking at that, it could be a supplement until I go back to work, until I find something else. But looking at a lot of different places, you could really have multiple streams of income. When you think about dividend income, when you think about your side hustle or whatever it may be, when you look at interest income, you can be on the opposite side of the fence. Now, what I mean by that is one side of the fence is you're paying for your mortgage, you're paying for your auto loan, your student loans, your credit card debt, everything in your life, really, you're paying interest. You are paying to finance everything that you have on in your life. The other side of the fence is people are paying you for the assets that you control. And of course, if that is stocks in a portfolio, they're paying dividends. There's usually a dividend yield. You see a growth. If you have money in the bank, they're paying you interest in CDs or savings accounts. There is a way to really bridge this gap, and it comes with a lot of financial planning and dedication. Now, before we get into the next one, guys, please subscribe to the channel. Let me know in the comments what you guys think, and let's get into this. The number 4 we look at, budgeting isn't just for the poor or the uneducated. Now, when it comes to budgeting, contrary to popular belief, a lot of people that are very meticulous about budgets, that are very wealthy, know exactly where their money is, what the money is going for, what expenses they are paying. They know every dollar. We've kind of beat this drum a lot when it comes to Dave Ramsey. When it comes to budgeting, people that I have seen personally in my life, I do financial education, I do budgeting, I do financial counseling. People that I see that have built out budgets and know exactly where their budget is are exponentially greater off when it comes to money management, when it comes to, avoiding unnecessary expenses, or when it even comes to prioritizing the goals in their life. Budgets are key, not just to know exactly where it is, but to know your financial well-being in general. Now, debt can be used and really built as a wealth building tool. Now, this one, a little bit of a double-edged sword. Wealthy people distinguish between good debt and bad debt. These are two different ways to really do this. Now, when you start thinking of bad debt, now you can break it into these two categories. When we start thinking of bad debt, that is anything, in my opinion, that is not tied to an asset. When you think of your mortgage, it's tied to your house, it is tied to an asset. When you think of your auto loan, you think of your car, it is tied to an asset. When you think of credit card debt, there is nothing it's tied to, just your promise to pay. Same with unsecured loans, same with a couple other loans. Not only do they have a much higher interest rate, which makes it bad debt, but there's nothing and no asset attached to it, which in my opinion makes a big difference. Now, thinking of good debt, and honestly, some of the good debt kind of goes back and forth. But again, when you think of a mortgage, most people need a place to live. A lot of times, renting can feel like throwing away money. Depending on your situation, renting might make sense for you. But also, when it comes to good debt, is student loans. Now, I know a lot of people are going to say student loans can be classified as bad debt. When you think of the ability to utilize student loans, if you don't have the money to pay for an education, to advance your career, to get an advanced degree, to go into essentially a higher paying job for the rest of your life, there's going to be a point when your student loans are paid off in full. That good debt allowed you to earn the income. And I'm speaking from personal experience. Me going to school, getting a bachelor's, getting a master's degree in finance made a big difference with good debt. Even though I had to take out student loans, it allowed me to get a much higher paying job because I did have an advanced degree in finance. And leveraging good debt really can grow your net worth. And that's exactly what it did when I was building out my net worth. Now, the next one we look at is paying themselves first. This is another one that I had to start. And I started when I was about probably mid 20s, paying myself first. So when you think of your paycheck, and regardless of how much you get paid, putting away 10% into savings and investing before you're really going and using anything else. So if you think about a budget and thinking about my zero-based budgeting is right off the bat, if I'm taking 10%, it's going to my savings emergency fund. Once it's fully funded, that 10% goes into essentially my 401k, my IRA, whatever investment vehicle that you choose. That means I have 90% of my income to live on. Now, on that 90%, I'm going to pay all my fixed expenses, my variable expenses, and whatever I have left over is what I'm going to use for fun, or I'm going to use for bulking up that investment account. It is a really common strategy. What happens for a lot of people is they utilize 100% of their income. 50% goes to fixed expenses. We have another 30 or 40 to the discretionary or those variable expenses. That last percent is used a little bit for kind of debt repayment. And then we end up not saving anything, and we don't end up investing anything at all, which of course can be super detrimental. Now, when it starts to YouTube, when it comes to time management, time is their most valuable asset. This is something, again, it took a little while to really relax and see wealthy people, time is more wealthy and worth more than it is money. If I think about my hourly wage and how much I make, when I look at simplified tasks, even thinking of editing YouTube videos, what does that make sense? Could I pay someone to do the job a lot better, a lot cleaner, a lot faster at a much cheaper cost essentially than it would cost me to do it myself? If I'm spending 5, 10, 15 hours editing a single YouTube video, does it make sense to just hire someone who can do it in 2 and pay them and be done with it? Now, as we continue to grow the wealth and as we're continuing to build these portfolios, high impact activities really grow the wealth. If I can make more YouTube videos while I have somebody else editing, because I'm not putting all of that time into editing, you can go ahead and generate more income. And of course, most of the YouTubers, when you think about getting larger, they have teams that are supporting them. They have editors, they have content creators. They are just the face of the YouTube channel itself. And overall, everything behind the scenes is created and completed by another person. The next one we look at is embracing calculated risk. Now, this one I love, stepping outside of your comfort zone. Wealthy people understand the importance of taking risk, whether it's a little bit of risk like starting a business, investing in a new market, going for innovative ideas, even investing in Bitcoin, getting into cryptocurrency, getting into a couple different spaces. You don't have to do this. The potential reward is a lot higher for the risk that you're putting in there and making informed and educated decisions. Now, we talk about this a lot. When it comes to decision making, you have to make sure you know exactly what you're investing in. So if you don't understand blockchain technology, if you don't understand cryptocurrency, do not invest in it, guys. You have to know exactly where you're putting your money, why you're putting your money in it, and exactly what the risk is. Now, of course, for me, I take small calculated risk. where a majority of my portfolio, roughly 95%, is in ETFs. It's in the market itself. It's invested in some tech. We do have some income generation. We also have some foundational ETFs. And I have that very small percent, which is my 5%, into Bitcoin itself. And I only buy Bitcoin. I do have a crypto portfolio outside that is altcoins, a bunch of other things because I do a lot of gaming. And of course, there are a lot of crypto NFT games out there that I like to. But again, I understand the technology and use it and leverage it to its fully. Now, next one we look at, don't follow trends blindly. This is one thing that can get you into serious, serious trouble. When it comes to financial fads, wealthy people are super cautious about trends, super cautious about the news, social media. There are so many things on there where even, content creators have been getting burned by promoting cryptocurrency, by promoting a lot of different products and services, where essentially the hype is building up and really, really trying to create value where there is no value between a lot of things, and they have gotten burned. Really avoid the hype, guys. It is something where if you see something like, for instance, today, we've seen a big dip in the quantum computing. When the CEO of NVIDIA said it might be like 10 or 15 years away, might be a little over exaggerated, but again, there was a big pullback just for the simple fact that a CEO of a company spoke. Could be completely wrong, might be spot on, nobody knows. But in turn, quantum computing did pull back a little bit today. Now, number 10, networking is a financial skill. When you have and recognize the power of connections with other individuals, it is going to change your life. When you have like-minded people, when you have mentors, when you have professionals, when you have YouTube groups, when you have a lot of collaboration, networking is not just about the social aspect of getting together, but really leveraging the financial opportunities that are there. And of course, the last one I'm going to leave you with, generosity is part of the strategy. When you think of creating wealth and when you think of really the wealth generation, very intentional about giving back to the communities, giving back to people, supporting local businesses, helping other people through mentoring programs. There are so many things where even if you don't have the money, goodwill opportunities, making a positive legacy and an impact on your community is an absolute game changer when it comes to how you feel about you being, honestly, a good human being. If you take a couple minutes in the morning, give some gratitude, make sure the generosity is there throughout the day, you will have a much better life. All right, guys, so that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.